Good evening. This is the video newsletter for Buy Sell Short for Tuesday, August 23rd. We're going to start off today with the GLD. That is the ETF that essentially tracks the price of gold, or actually, in my opinion, actually causes the price of gold to run. The ETF pushes the price of gold, but that's a whole nother video we'll do someday. But the reason we're talking about this, given in the context of today's huge rally, what happened in gold is significant. This is what we've been waiting to happen over the last couple of weeks. Gold to get smacked over the head. And that really came into effect in the last hour when we saw the market just explode upward 150 points after that earthquake on the East Coast. Oil or gold was down, pretty much $30-40 for most of the day, and then going into that last hour just absolutely free fell, ended up down $70+ an ounce, which is fantastic because it means some of the fear trade is coming out, and that gives us a little bit of confidence in the rally we had. Remember, we are still essentially sitting on our hands, and the reason being, this Friday we've got the Jackson Hole meeting, the Fed governors meeting at Jackson Hole. And the reason that, has become such an issue is because what happened last year when Bernanke talked about QE2 and the market ended up going on a very nice run after that, essentially bottomed until we had this sell-off earlier in the year. One thing to keep in mind before I forget, the Jackson Hole meeting last year, after the Fed came out, the Dow ended up losing 150 points. So just keep that in mind. There is a lot of expectations being built into this meeting on Friday, and it is very likely the market is going to be disappointed with whatever Bernanke initially says. So what we could be looking at is a nice little rally over the next couple of days from deeply oversold levels. Put a little bit of hurt on the shorts and on the gold longs, and set us up for another possible sell-off next week. That is the scenario we're looking at right now. But, all in all, kind of positive today. Very frustrating market yet again. A lot of stocks have been pretty dead, although we did see some pickup going into the last hour. And tomorrow could be a very nice day in small cap land if we don't see them pull some skeletons out of the closet overnight and we get some bad news on some bank or some European crap that has been typical, really over the last couple of months. As for the gold trade, you can see here gold is coming back, GLD. Possible downside is to that 20-day exponential at 170. You'll note before this craziness that the Tea Party started brewing with the debt ceiling crisis 6 weeks ago, first week of July, GLD and gold pretty much traded at or around its 8-day and 20-day exponential moving averages. And when it strayed too far above, came back. When it went too far below, it bounced back. That sort of disconnected when we started this debt ceiling crap last month. And, those are obvious targets. That little sell-off we had 2 weeks ago ended up having us retrace, touch the 8-day moving average, and then spike higher again. So it's going to be interesting to see how GLD acts tomorrow on that 175, 176 level. If we don't see a bounce back, we're looking at 170, and then fingers crossed, because I'd love to see this gold trade get decimated right now. A possible retest of that 50-day moving average down there at 157. If we see gold down here approaching these levels, odds are that we're going to be doing pretty damn well in the overall indices. So the first little key is there. Let's see if the other things happen. If we did not have the Jackson Hole meeting this Friday, I would probably be a lot more bullish on the market and be doing a lot more shopping. But there's just such a uncertainty out there with this meeting on Friday at Jackson Hole, and so much hope and anticipation for the Fed to say and do something earth-shattering that we're setting the stage for a letdown, and that's what I'm thinking on that. Dow 15-minute chart, as you can see, again, going back to that same statement, if we did not have Jackson Hole, we would be looking at a possible very nice double bottom on a lot of the major indices. Dow right now, we could be looking at a golden cross sometime tomorrow, perhaps Thursday, and that might be the juice to power us up here to this 11.4, 11.500 area going into Friday's meeting. Needless to say, 300-point move, 4% on the S&P, almost 4% on the Nasdaq, 3% on the Dow. That's a big up move. So we're going to have to see what happens in the market in the morning. Dow daily chart, you can see indicators look pretty good. We've got that 20-day exponential calling us on the daily chart at 11,400. You know, the way we're moving these days, up and down 2, 3, 500 points, you know, we could hit the 20-day exponential 2 minutes into the open tomorrow. It's just that kind of crazy market. And another thing, how I mentioned the market sold off on last year's Jackson Hole meeting. We dropped 150 points. This time last year, even though the market was really bad, we were only moving 100, 200 points intraday. We're still in this crazy 500, 400, 300 point intraday moves on the Dow. So, you know, we could tweak that number. It could be a lot worse, could be a lot more. As I said, indicators look good. We could be looking at a positive MACD, all deeply oversold. And, you know, not to beat a dead horse, looks like a very nice possible double bottom here. But, you know, I'm going to err on the side of caution just because of the expectations we've built in. But the next couple of days could be very, very nice in small caps, especially given the action we saw going into the last 45 minutes of today. A lot of stocks popping, not a whole lot of volume. You're going to see traders come home tonight, look at the big up moves. If we don't get any, you know, bad news overnight, we could see some nice follow through on these beaten down small caps tomorrow. SMH, very, very strong today. 20-day exponential is calling the SMH right now. That is at 29.68. Would love to see that over the next couple of days, and then we can lighten up our positions and just see what the Fed says and trade accordingly, you know, come Monday. As for stock plays, go to the website, under trade alerts, check out the last trading alert we sent out a week ago with possible plays for a rally. That's a nice 32 stock list of small cap stocks. Same stocks are going to be a focus again this time around. They proved that they can run. Remember, just in a few days on that rally we had a week or so ago, we got multiple 20 to 50% moves off that list. And many, if not all, have come all the way back down to those prices they were at before that rally. So they've already proved they can run. That's the list we're going to be drawing from over the next couple of days. So pull it up. Make sure you got a watch list of those plays. And, you know, that's what we're looking at going into tomorrow. Again, we're going to be continuing to pay very close attention to what the price of gold does. And if we get no skeletons in the closet overnight, tomorrow could possibly be a decent day in the market. So that is it for the video. Any questions, feel free to shoot me an email. Hit me up in the chat room tomorrow. But definitely take some time. Go check out that list, and, you know, that is what we're going to be looking to trade over the next couple of days. See you guys in the chat room tomorrow. Good night.